the IRS has shared new details about deducting interest paid on a loan used to purchase a qualified vehicle. Learn about this provision of the One Big Beautiful Bill at ... I thought they were changing the name of the One Big Beautiful Bill. I thought that they were gonna, I don't remember what they were gonna call it, like the One Something Family Act or something like that. I honestly can't remember. I think it's a whatever idea. I don't know if it's gonna stick or not. But anyway, this is updated. Oh, good grief, man. Way back on July 25th. Sometimes that irritates me, but look, they posted this 4 hours ago, so it's a reminder. I missed it. I didn't see this up until just now. So no tax on tips. We already know that. And they go into the detail here. Obviously, I'm going to link this in the description too. It'll start with irs.gov. So if you want to read the details on no tax on tips, there's also no tax on overtime. And then it gets into what I wanted to take a look at. No tax on car loan interest. New deduction effective for 2025 through 2028. Individuals may deduct interest paid on a loan used to purchase a qualified vehicle, provided the vehicle is purchased for personal use and meets other eligibility criteria. Lease payments do not qualify. Maximum annual deduction is $10,000, which would be really helpful for just about everybody. Deduction phases out for taxpayers with modified adjusted gross income over $100,000, or if you're jointly filing 200K. Qualified interest. To qualify for the deduction, the interest must be paid on a loan that is originated after December 31st, 2024, and also used to purchase a vehicle, the original use of which starts with the taxpayer, which means used vehicles don't qualify. And it has to be a personal use vehicle, so you can't use it for business or commercial use, and also secured by a lien on the vehicle, so like a bank owns the vehicle. And if a qualifying vehicle loan is later refinanced, interest paid on the refinanced amount is generally eligible for the deduction. All right, that's interesting. Qualified vehicle. A qualified vehicle is a car, minivan, a van, SUV, pickup truck, or motorcycle with a gross vehicle weight rating of less than 14,000 pounds, and that has undergone final assembly in the United States. And the location of final assembly will be listed on the vehicle information label attached to each vehicle on a dealer's premises. Alternatively, taxpayers may rely on the vehicle's plant of manufacture as reported in the vehicle identification number to determine whether a vehicle has undergone final assembly in the United States. I think it starts with a 1, doesn't it? I believe it could be an A, but I think it's actually the number 1. If your VIN number starts with the number 1, then it was assembled in the United States. The VIN decoder website for the National Highway Traffic Safety Administration provides plant of manufacture information. Taxpayers can follow the instructions on that website to determine if the vehicle's plant of manufacture was located in the United States. I'll link that. Taxpayer eligibility deduction is available for both itemizing and non-itemizing taxpayers. The taxpayer must include the vehicle identification number of the qualified vehicle on the tax return for any year in which the deduction is claimed. And for reporting, lenders or other recipients of qualified interest must file information returns with the IRS and furnish statements to taxpayers showing the total amount of interest received during the taxable year. And for guidance, the IRS will provide transition relief for tax year 2025 for interest recipients subject to the new reporting requirements. So there you go. And then it goes on, deduction for seniors. I think that's it. Yeah. So yeah, there you have it. So if you just got a new car and if it was manufactured in the United States, even if you make under $100,000, especially if you make under 100 grand, you got some money coming your way if you fill out your taxes the right way. And apparently you have to get a hold of your lender so they can determine how much interest money that you paid them. So yeah, man, there you have it.